Hey guys, welcome back to the Trading Coach Podcast. As always, I'm your host, AKIL'S. Today we're going to talk about what has happened in the first quarter of this financial year. I'm also going to share with you a new indicator that I just learned about and wanted to show you guys. Now, before we get too deep into this episode, this is another video edition, so you can check it out on Spotify. I know they show the videos. I'm not sure what other podcasting apps do it, but if they do, head over to there because we're also going to show some cool graphics, especially when kind of talking about this fear and greed index. Also, you can check this out on YouTube. I stopped doing the audio only versions on YouTube just to clean up the channel a little bit, but because this is a video episode, you can view it on YouTube as well. And if you are new to the YouTube channel, make sure you subscribe. There's a lot of cool content I've been uploading almost on a daily basis. Well, I guess technically on a daily basis with the shorts, but the long version of videos on a daily basis as well. So it's a great tool to make part of your normal routine. So we have just wrapped up the first quarter of 2025. And I was speaking to our traders this morning on the platform and telling them we're in very interesting times. One, we're at the end of a financial quarter. Two, we're at the beginning of a new month, which means all the funny job stuff that's happening. And three, we are 2 days away from Liberation Day. What is Liberation Day? Well, Liberation Day, in general, liberation has a lot of meanings, which probably shouldn't be used in the same context as what Trump is using them as, but that's a story for another time. This form of, quote, Liberation Day is Wednesday, and this is the day where the rest of Trump's reciprocal tariffs are going to be put into place. Oh yeah, along with probably a few new ones as well. And this has been really the biggest news / surprise / not really surprise in the market this year, and kind of the main theme behind everything that's happening globally. And to quote an article that I read the other day that I forgot who wrote it, they are laying the groundwork for things to get worse. So here's the deal. Going into 2025, we were at a pretty decent place in the financial markets. Stocks were booming, they were at their highs. And the initial thought was that when Trump took over, things were going to be more of the same, meaning that he wouldn't really do anything to kind of disrupt the upward trajectory of the market. And this was kind of something that Trump did in Trump era 1.0. He was very protective of the financial markets. And, what do? We base our assumptions, our decisions off of past behavior, off of past results, just like we do in backtesting. So I think a lot of investors, a lot of traders, a lot of people in general figured it would be more of the same. The truth is, it's been the exact opposite. Trump has come in and he's been very disruptive. And again, before we get too deep into this is not like a Trump bashing or anything like that. I don't really care about politics aside from on a very local level. I'm kind of just bringing you the news as it is. So don't kind of get mad in the comment section. I know politics is a very touchy subject, right? Politics, money, religion. My dad said those are the three things we never talk about at the dinner table. But I guess now that most people don't eat together as a family at dinner tables, we just never talk about them at all. I don't know. Anyway, back to the point. Trump has come in and he has been disruptive. I'm going to insert Kool-Aid Man jumping through the window. Oh yeah, right? You see, the street, Wall Street, likes predictability, right? The markets like when things are predictable. When things are predictable, things are safe. When things are safe, we feel comfortable investing and doing other things and kind of being like, hey, if price is here, it should go there, and boom, let's just watch it ride. However, when someone comes in and they're very disruptive and they're prioritizing things like tariffs, for example, or like government cutbacks, just to name a few, this gets the market a little bit rocky as it introduces a lot of uncertainty. So a good example was interest rates, right? After lots of uncertainty in the market over the last, 2 years, or I guess since COVID, to be honest with you, in the end of 2024, we finally were on track for a rate cutting cycle, right? We knew exactly what we wanted to do. We knew exactly how many times we wanted to do it. The market was kind of on board and everything was in this nice little grace period of like, hey, we got this kind of elephant in the room out the way. Now we can just get the trading as normal. And you can see already in 2025, not only have we put a pause on it, but we're having to think, and no one really knows what we're going to do. Are we going to continue to cut? Are we going to increase? Are we going to hold? It's kind of back in this level of uncertainty, and that makes the market on edge. And when the market is on edge, people don't like to do the things that they normally do. You can kind of think of it like stop and go traffic for any of you guys that live in the city. When the confidence is low, you get these strange times of like volatile repricing where something is valued at this and all of a sudden, oh, I don't think it should be that, and everyone rushes to value it at something else. But then you get these periods of uncertainty where no one wants to act because no one is sure. So it's like crazy market movement, nothing. Crazy market movement, nothing. There's no natural flow to the financial markets, and that's not really good for traders. Because of that, a lot of big traders tend to stay out of the markets because big traders, any trader, but especially big traders, they don't like putting themselves in times where they can be wrong, so they'd rather just wait it out until they feel very secure in what their predictions are. Just to add to that, kind of the promises that came in with Trump's administration was that, hey, when I take over, things are going to be good from day one, things are going to keep rolling, let the good times roll, right? And now we're kind of getting the opposite narrative. Now the talk has been, hey, you know what? Sometimes we got to deal with a little short-term pain now in order to have long-term rewards later. And again, that's just not something that the market was prepared for. So what has this resulted in? Well, I believe this has resulted in the worst first quarter for the S&P, and I think like the past 3 years since 2022. Not only the worst first quarter of the year, but the worst overall quarter since 2022 as well. So I think the S&P, at least at the time of recording this, is down about 4.5% or something around that area. Not only that, but the US dollar, the safe haven, the good old mighty dollar, is also down 4% as well, which is its worst start since I think 2016. Just to sprinkle some more bad news on top of that, we're also facing a growing risk of recession. I think the last I saw, the banks were projecting like a 35% chance of recession in the next 12 months, and that's up from a 20% chance the last time they said it. With all this fear talk going on, I went over to the VIX, which is like a volatility index in the market, VIX. You can literally look it up and check it out on your chart. I'm probably showing it in front of you if I'm doing any editing work on the video version, but that is the VIX. And what the VIX is it's pretty much Wall Street's volatility or fear gauge. It's traditionally used to measure like the level of risk in the market, the level of fear in the market, the level of stress in the market. And if you guys want me to do a kind of a separate podcast going into more detail about it, just let me know and I can put it on the list. But in my search of researching the VIX, I came across another article where they mentioned another index that I never heard of before, and it was called CNN's Fear and Greed Index. Now, real quick before we get into the indicator, I want to do a quick plug. The podcast has a sponsor. The sponsor is Easy Trading Computers. They're the only sponsor for the show because they're someone that I actually use and actually have a good relationship with. If you're someone that's looking to buy a trading computer or looking to build one on your own and just want to get an idea of, hey, what type of parts do I need? I highly recommend checking out their free computer buying guide. I'll put a link in the show notes below. You can check it out. It's a massive amount of information for people who do know about computers and even more for people like me who don't know about computers. So check that out. Now, obviously, if you listened to me before, we talk about kind of understanding the market and knowing that the market moves off of two things, fear and greed. If you can understand crowd psychology, if you can understand human behavior, you can understand the market. So it kind of sparked my interest to hear about an indicator or an index, I guess you can say, that measures the thing that I believe moves the market the most. So I want to check it out and I want to share it with you guys as well. So let's load it up on our chart and let's start by talking about what is this Fear and Greed Index. So I believe it was created back in 2012 by CNN, right? Hence the CNN Fear and Greed Index. And it was created to measure and gauge sentiment in the market, the stock market specifically. I actually heard there was a crypto one for it as well. I don't remember the name. I didn't really go down that rabbit hole because I get distracted enough. But if you're a crypto trader, I think there's a crypto version of it as well. I'm just not sure what it's called. And pretty much what this indicator or index, keep calling it indicator, index. If I say indicator, just replace it with index, right? Words. Pretty much what this index does is it shows how emotions of the market, and by market I mean the participants, affects the actual market movements and market actions. Or in short, it tells us when we're greedy and when we're afraid, with the idea being that when we are greedy and confident, prices go up. When we are scared and afraid, prices go down. Which again, makes perfect sense if you've ever heard me talk about the market and all kind of the funny stuff that humans do. So there are 7 things that go into this index, and you should be seeing a nice little kind of graphic on the chart in front of you. One, and I'll make this short version, I won't read it, but stock market momentum, right? Stock price momentum, I should say. And this is essentially a measure of the S&P versus the 125 daily moving average. Number 2 is going to be your stock price strength. This is the number of stocks hitting their 52-week highs versus those hitting their 52-week lows on the New York Stock Exchange. Next is stock price breadth. This analyzes the volume, right? The volume of rising stocks, so stocks that are going up, versus the volume of declining stocks, so stocks that are going down. Next is put and call options. This is the extent to which put options lag behind call options. This is pretty much the same thing, buying versus selling, put, call, buy, sell. Next is junk bond demands. This measures the spread between yield on investment grade bonds versus junk bonds. Market volatility is your penultimate. This is measured through the VIX, right? The volatility index that I spoke about earlier. And then lastly is safe haven demand, right? And this is the difference in returns of stocks versus your treasury. So like what the safe haven is. We know those bounce back and forth depending on fear and greed. Like many indicators and oscillators, this index is now scored, and it goes on a scale from 0 to 100, with 0 being extreme fear and 100 being extreme greed. And as you can see on the day of recording this, we are at a strong 19, which means extreme fear. Yay. So with being so new to this, I obviously haven't done any research on it, so I don't know how accurate or whatnot it is. But from everything I read, it has been a good indicator of high periods versus low periods in the market, which makes sense because if it is an indicator or an index, it is lagging behind actual price action. So that doesn't really tell me a lot of information. However, what I was curious about, right, just in general, was if a trader were to use this, using it the same way they would use tools such as like the IG client sentiment or the COT reports, right? Using it as an outside source of information to get a general feel of the market, in an understanding that we probably want to do the opposite, right? If you're familiar with, I'll take the IG client sentiment, for example, it basically tells, it shows you information on the buyers and the sellers in the market. And you would think that when the buyers outweigh the sellers that you should be buying, but it's actually the opposite, right? If you remember what we talk about doing the opposite, we want to be greedy when people are fearful when people are greedy. To a certain extent, right? Just don't go out and buy every time the market crashes. You want to be smart with it, obviously. But the idea is that we should be thinking the opposite. So in times where the market shows a lot of fear, we should be looking for opportunities. When there's a time that the market shows that it's over-greeded, I'm thinking over bought, because I just took a peek at a trade I have on my RSI. If it's over greedy, that's when we should be looking for periods. Hey, maybe I should start reducing my position, cashing out a little bit. So I can certainly see how it could be used in that sense of kind of like from a longer term investment standpoint, obviously, where it's like, hey, I'm looking to acquire a position in XYZ. Let me see what the feel of the market is. That way I can position myself to get the best price, or if I'm already in a trade or an investment, knowing when it's time to get out or wait for a better price before getting in. So certainly something interesting, nothing special, nothing I ever plan on using, but I came across it. I turned the microphone on. I said, hey, why not share it with you guys? If anyone out there has ever looked at it or used it, please feel free to share your opinion. I would love it. I learned a lot of things by talking to other traders, right? I don't position myself as someone on this pedestal where I know more than everyone else. No, I'm always on this learning adventure. So if there's something I can learn from you, I would love to hear it. Worst case scenario, it gives me more knowledge. Best case scenario, maybe it's something that I can use in my investment tools as well. So just leave it in the comment section below or shoot me a DM on social. So before you go, I want to share with you a few podcast episodes that have recently caught fire. That way you don't miss it. Episode 1134, the OG trading strategy, back to basics. Make sure you check that out. Episode 1131, how to avoid panic and protect profits. This is a massive one for anyone that has suffered through a drawdown and gets really nervous and feels like they make their situation worse. And lastly, episode 1127, how to activate the cycle of success. If you're a trader, I assume you want to be successful. So yeah, you want to know how to activate that thing. All right, until next time, plan your trade, trade your plan, like, rate, review, and I'll see you guys next episode.